Hey everybody, hope all are having a wonderful slow week in the US and Canada, I guess. You had your holiday on Monday. We've had ours yesterday. Some folks back to work today. It's nice to have the market open because I've been anxious to put on some new positions since Wednesday when things closed off. Today, brief note. I hope that many of you watch this brief note. Um, we have a lot of new subscribers over the course of the last year. Here's what I would like to propose for those of you that don't know myself or the Gold Investment Letter very well. Take a crack at a couple of my recommendations. See how we do from here going forward. A big part of this game, guys, is you can be stunted intellectually, morally, whatever it is, and still make a lot of money if you buy things at a time where they're going into or are just starting a bull market. You can be a genius and you can have all the moral aptitude and then some that you desire and lose money in a bear market environment to swim upstream, in other words. Right now, what I'm seeing in the mining space, in the metals and mining space, is a very compelling setup. Um, very compelling. We're seeing a nice bounce, and this is while gold, for example, is range bound. I'm sorry I can't share my screen on the phone. I want to make sure you get good audio, but you can look these things up on your own. But we have had a very beautiful bounce at higher highs, higher lows on gold since it broke out into the 2300s. We had pulled back. Let me actually pull up instead of GLD, which is not the best way to look at things. But we had the move in February, closed out in March at that key 2100 plus level, which was an all-time high monthly closing on the price of gold. I had been talking about this for a long time as the trigger for us to go in heavier in gold and gold mining stocks. Sure enough, we had a move from about 21 and change to 24.50 in the course of like 2 weeks. Now consolidation came in into early May, back to 2300, back to 24.50, back to 23 and change. Now we're starting to move back up. We're at 23.70. And the way that the way you don't want parabolic just blast offs that are going to end up coming right back down. You want the stair step effect of a bull cycle. Higher highs, higher lows. These are sustainable. And I am absolutely convinced you're going to watch, and I'm not saying this in a haughty way. I'm saying it in a humble way because, again, I just want to remind you all I have made every mistake in the book. However, at this point in my life, I'm 49 years old. I was a professional stockbroker at the age of 20. I've had a lot of experience in capital markets. I believe I've learned from a lot of my mistakes and continue to learn and evolve. And that's why I have some confidence in my abilities in terms of speculation, investing, trading, you name it. And a lot of my focus since 2011 or so, when I launched the Gold Investment Letter, a good chunk of my priorities have been in resources, natural resources, resource companies, mining stocks, everywhere from being the investment banker, financier, if you will, to just a pure investor myself, to a swing trader on top of core long-term positions. I've, come from a background of risk management, portfolio management, position sizing, all these different things that you need to, have in consideration if you're going to appropriately, with a reasonable amount of risk, make a fortune in investing. Um, Again, I've had my ups and downs, but right now, I'm telling you guys, you want to be perhaps not fully invested in gold, silver, and mining stocks because there are a lot of opportunities that I'm discovering as I go through my days and my weeks that are newer. And I want to have some dry powder for those, particularly like, for example, in the silver area. There are so few publicly traded silver companies, and silver is outperforming gold and will continue to do so throughout this full cycle. It's just typically what happens, always happens, knock on wood, with silver on a percentage move basis on the way down or on the way up. Bear cycles, they get pummeled lower. The price of silver, bull cycles, the price of silver increases more than the price of gold. The difference being that, gold is a nearly $14 trillion market, silver much smaller. Silver has a fraction of the publicly traded vehicles. It's harder to find pure play silver mines. A lot of times, silver production is as a byproduct of other base metals. So you want to be, and I'm going to give you guys two silver names that are not tiny today that you can look at, even if you're a family office or a small fund manager, to take a position. And, I think to have some alpha in the sense of outperformance versus the largest cap blue chip silver producers. Same thing in the gold space. You don't need me to tell you about Newmont and Barrick. You guys can get your research from CIBC and BMO and Stifel and other houses, on Wall Street and on Bay Street. That's not my forte. My forte actually goes way down the rung. I love to speculate in small junior exploration companies, but I also am a big proponent of having a fundamental base in sector positions that are what you would call mid caps, multiple hundreds of millions of dollars of market cap to a billion to a billion five. Those are the ones that I'll put in more size. I've talked about these in the past. The two today that I'm going to talk about are in that ballpark. And that would be First Majestic, I think, has been destroyed, overly destroyed, and is going to be making a nice comeback. And it started to come off in this bottom. But yeah, I'm looking at the Canadian price at 8 and change, but I look at the US side, 641 for First Majestic, which, by the way, and if you look at a 10-year chart, this thing's at the low end of the range. The higher ends of the range in 2016 touched $19. In 2020, we went up to $24. And really, I don't see much lower than in 2015, we grinded down to three and change. I don't see an environment where that's happening or warranted because silver's over $30. Okay. And going higher. I believe silver is headed over $100 in the next few years. Call me crazy. Maybe it's the next 5 years. But silver was $50 an ounce in 1980. Just adjust for inflation and take a huge discount to to the highs, and a triple is not out of the woods for silver from here. In fact, I think it is very likely. It's just a matter of the timing. But First Majestic, to be fair, they were more of a pure play silver company. They've moved a lot over into the gold area with their ambitions at Jarrett Canyon and things of this nature. That's fine. I don't mind a mixture. It's still known from the street. A lot of people look to it as a silver play first and then a gold play second. But buying in around these levels, I'd call it 6.5 US, Canadian 875. I mean, guys, this is a great deal to put some money in. And you're talking about a $2.5 billion Canadian market cap, which is going to be closer to a little over 1.5 US, like 1.6, 1.8, 1.8 billion on the US side. It's not a small company. It's not a ridiculously large company, but it's a stock that could easily triple. I also have Silver Corp. So I'm going to give you two options on these silver companies today that I think are worth throwing a bit aside and just taking some positions while we're coming out of this summer malaise and correction. Silvercorp Metals is an Asian based silver producer, fairly pure play, $3.50 on SVM in the US. Let's see what we've got on the Canadian side, 483. On the US side, let's go to the market cap, which is smaller, 625 million US. You know, these guys are cash flow positive. The PEA ratio is 17. There's going to be a lot of leverage in increasing gold and silver environments for these companies that keep their costs relatively stagnant, despite, you know, even like a rising oil environment. Earnings in the second half and the first part of 2025 are going to drive producers to higher prices, in some cases much higher prices. The M&A activity I'm seeing out there is picking up. There's going to be companies that are going to anticipate being taken out and trading to a premium. We're coming out of a, you know, we started already. It's about a half year into coming out of a 3.5 year bear cycle. That has not been the case for the juniors, the smaller plays that are still in some cases hitting lows, but that will survive and that will come back in some cases in spades. And those are the ones that, you know, we take positions in. And I mean, I've made 100 times my money in junior mining companies. Granted, you have to include the warrant that, in the case of what I'm thinking of, Encore Energy, uh, you know, we've had some huge winners in, like, you know, the 20x to 40x. Gungnir Resources at a half a penny to 40 cents with the warrants that we did, where we rolled in the stock at 3 cents into the placement with a 5 cent, 5 year warrant. So, you know, not everybody could do those placements, but those are big moves that were from like 2015. Took a couple of years, but big gains. Not a lot of money in those, but it doesn't matter because it can turn into a lot of money when you have those type of returns. Abra Plata, which is now Abra Silver, was a massive win for us. We've had many more, some even outside of the mining area. I've taken exceptions over the years. I'm thinking Sona Nanotech going into COVID, where we made 25 times our money in a short period of time there. I've got a laundry list of companies that we've taken positions in and, you know, booked profits at 5x, 10x, 20x. You know, certainly plenty of doubles and triples and quadruples, but not everybody has that, right? And I also have losers. I have duds. Look at like Carlisle Commodities, for those of you that are like, probably you got into that deal in the teens. It's back down under 5 cents. All I could say on something like that is that when we went heavy in there, we financed it at 8.5 cents, buying more in the market after getting involved with what is, I think, a very good asset, 1 million ounces of gold in the inferred resources, trading for, you know, $2 an ounce in the ground. And then there was just, I've got to monitor how and who is executing these companies. And, you know, my discipline is that I just stop supporting them. I'll hold if there's still value there, but I stop telling people to continue to accumulate. I'm not going to keep putting my neck out there if there are things that I'm seeing that I just, whether they're red flags, yellow flags, whatever, there's so many opportunities out here, guys. We don't need these companies. They need us. All right. And so if you have a dud like that, you know, you can look at things with me and with the gold investment that are a couple of ways. You can say you're a pump and dumper, you're a scammer, you're a dipshit, whatever you want. All's fair in love and war. But I feel bad for people like that because what ends up happening is if you get caught up on a loser, on something that doesn't perform like we had hoped that it would, you're missing the entire model of what makes us successful investing in really venture capital stage companies. And a lot of these junior exploration companies, guys, the what's become acceptable in Canada and Australia, they shouldn't even be public. They're like freaking price like hot dog stands in Manhattan, meaning like you've got a $2-3 million market cap, and they're just so small, like they shouldn't be public companies. In the United States, you've got to be usually a lot bigger than that. But on the flip side, I love to look for companies that are trading for these like sub $10 million market cap numbers for those of us that are high net worth individuals and regular retail investors. If you're a fund and an institution, you can look at Silvercorp. I haven't gotten into a lot of deep fundamental analysis, obviously. I've watched these deals, First Majestic and that, over the years. I've looked into details in the balance sheets over and over and over. I'm trying to narrow down stuff that you could take action on if you want to just say, I'm giving Mashinsky a chance from here and I'm going to put some money to work at his ideas. We'll see what happens. And then, if the guy's right, makes me some money, I'm going to join premium, or hopefully before it's not too late and it's closed off, I'll do the elite, which is where massive value comes in because we get, financings that we lead as a group for, a million here, a million there, and we get long-term warrants and discounts to market. And I'm typically at this point, this wasn't always the case because I didn't have the money, but at this point, I'm the biggest investor in anything that we do with financing companies and private placements. And then I share that. But part of the reason it's a benefit to have the group is because we can go in and negotiate with a company versus like me writing a check for $100,000 or $150,000. I can say, hey, we're good for 1.5 million, 500 grand. And, and they're good people. We're not just a bunch of warrant clippers where 4 months in a day and we're going to sell. We're in this for a cycle. And that's what we have to be focused on, is a bull cycle that is coming. It is cometh in the future, and it is going to cause a pendulum to swing where these companies and these stocks will go back, just like they have in the past, to trading to premiums to net asset value, premiums to cash flow, premiums on every which way. There's going to be a frenzy of sorts that comes in. To me, the biggest thing that you can do to help yourself and to have a good relationship with what you're seeing here with me is to be a buyer in an environment like this, not to like show up after stuff starts to really kick in. I think it's going to happen this year in the sense where things are really going to start to get moving. Like even the small ones are going to start to take off. And it's very difficult to buy positions that are meaningful in small, tiny cap companies after they start to explode because there's a lot of competition to buy them. And even if you're a smallish investor and you just want to put in 10 or 20 grand into some of these, it's tough because you're going to end up paying up big multiples. I love buying in environments like this and actually recommending it to you, my readers, because you don't want to get caught up in the day-to-day, week-to-week ticks in the price. We're going for freaking 10 to 100x returns in some of these little juniors. Who gives a shit if it goes down 25% or up 25% in the next month? It doesn't do anything. It's just all a distraction and like entertainment value. I'm in this business, and I got in this business to get out of a cursed, blue collar, never getting ahead family with no money, to hopefully being a wealthy individual that can help, you know, do what I want to do to help others and other things, and obviously live a good life, you know, and I like nice things and things of that nature. But I'm not here pitching you guys so I can buy a new Bugatti. I could give a fuck about a Bugatti. I couldn't care less. I drive a 2018 Range Rover and a white minivan so that my dogs can get in with their bad legs. Anyway, Silver Corp, this stock is very, very cheap. And if you want to get a little bit of juice on these, I actually just bought a little bit more today of not only Silver Corp, the company. I think you have to have some silver positions, and these are ones that are not so tiny. We're seeing Hercules come back. That was a bad trade because I didn't wait for the triangle to break out or to break down for the warning sign. I did it before that, trying to give people time because I anticipated that it would break up. It broke down first, but it's been coming back, and I think it still will close that gap at a $1.30, $1.40, and we'll all come out ahead. I haven't been talking about it a lot lately, but that was a swing trade. These are things you can have for more of an investment into a cycle that is really not even kicked in yet. You know, silver at 40, $50, you're going to start to see the companies that are producing these things printing money. So AG, which is the First Majestic side, you know, I've got a pretty good core position in the actual stock, but I've actually got in this E-Trade account, I've got just as much, 30 grand in January 16th, 2026, $7 call options. So those are called leaps. Those of you that know me, I like to pay the little bit of extra premium to have duration. And I like to buy things that are at or in the money. We're a little bit off on a discount with AG, which is 640, and that's at 7. But because of the time frame we have, 18 months, I'm okay with that. And frankly, I paid $1.77 on this one for a $7 call for 18 months that will start to move dime for dime, dollar for dollar once AG goes up 8%. On SVM, I've purchased January 17th, 2025, $2.50 calls, even though the stock is at $3.50, instead of buying the $5 ones, because dime for dime, dollar for dollar from here. I couldn't buy longer term duration, but 6 months should be just fine. And I paid $1.30 for that. So it's already $1.05. Actually, it's like $3.55 right now. It's $1.05 in the money. So I'm literally paying 25 cents net, you know, as the time value of the option. And it's going to move dime for dime, dollar for dollar. If it goes back to $5, you know, this option will minimally double, which is just going to be like a 30 to 40% move in the stock. The option will be up if it happens sooner than later, 150 to 200%. And if it happens later, closer, meaning to the expiry date, you know, maybe I only double my money. But I like doing those things to sprinkle on top. Now, two things I'm going to mention that I'm stopping. Number one, if any of you are heading to the Rick Rule Symposium next week in South Florida, I get there Monday night. I'm staying until Thursday. I've got a number of meetings, but I actually did this more spontaneously, so I have some open slots on my calendar. Email me back if you have an interest, if you're going to be there and want to link up. I'm looking at new companies. I'm meeting with investors. Some of them are mine. Some are, you know, with me. Many of you are not. You know, maybe you're just on the free list and you want to chat about a particular company or just meet. You know, I mean, I have no agenda going down there. I will tell you this though. So if you're going to the Rule Symposium and you want to try to connect in some way, shape, or form, shoot me an email. Let's see if we could get something on the calendar. Could just be a 15-minute meet and greet. Could be lunch. Could be that you've got a booth there. You want me to stop by and say hi and hear your pitch. I'm open to all of it. And I'm not a big conference guy, but I actually just interviewed Rick on Real Vision not long ago, and it was a really terrific interview. And I figured I would go and support him. A couple of long term, client friends that are in the business who've known Rick, and some of these folks for a long time are going to be there. We're going to spend some time together. I also have a target person that I've never met in person that I think is probably the king, if there is a king, in all of the very successful mining operators, investors, and that's Robert Friedland. And Robert Friedland is running Ivanhoe Energy. I want to get more information about that copper play. I own a little bit, but I've never covered it. I need more information on that as we go into a copper bull. And then there's Ivanhoe Electric, which is where Robert Friedland doesn't know it. If you happen to know him and want to just tell him where this comment starts here, please do. He's the cherry on top reason why I got involved in what was at the time First Vanadium and now is Phenom Resources. So he had a very rare public chat at was it Cambridge House in Vancouver. I saw a Stockhouse article in 2017 about all the lithium plays, and Robert focused on vanadium redox batteries and made a comment as such of like, if you are younger and you want to make a lot of money in this business, go find some vanadium because these redox flow batteries are going to be huge. And it's been a while, it's been a delay, but they're just now we're seeing these compound annual growth rates of vanadium redox flow batteries, and now this new iteration of solid state batteries. This is going to be and it is now already a very high growth area for industrial metals. Just telling my mother to get the door. Uh, the industrial grid and the backup has got to happen from vanadium batteries, not from lithium. You can keep that in the electric vehicles. The industrial market is even bigger. And so he's the one who basically, I had heard about vanadium doing due diligence just before I saw his comment, and I have so much respect for him. One of the best books you could ever read if you're a mining investor is called The Big Score by Jack A. McNish. I've read it about 5 times, and it's all about the Boise Bay discovery under a company called Diamond Fields that was run and chaired by Mr. Friedland, and made him a very, very wealthy man. And some of the details in that book, I would just, I'd love to meet Robert in person because we haven't met one on one before. So I'm working on that. Whether I get to interview him or not, I don't know. But I want to tell him about Phenom Resources because with Ivanhoe Electric, we've got with Phenom, which will end up getting spun out probably by the end of the year into Phenom Vanadium and Phenom Gold. We have a superstar exploration gold business and package of 5 properties that are going to be in the Phenom Gold vehicle, all vetted by Dave Matheson, except for one copper asset that's in Arizona that's greenfield, but very prospective. The rest are elephant hunters. And, you're going to get a piece of those companies when that spin out happens. But the vanadium side, I will go toe to toe with any story in vanadium on planet Earth, and Phenom Resources is morphing into what did Paul Cowley tell me the other day? He said the way that this thing is bubbling up around us. He actually used the word, he's a guy in his 60s, that he's stoked. And I'm freaking stoked. Phenom's trading wonderfully. And for those of you that don't have much stock or don't have a position, it's spelled this way: PHENOM Resources, PHNM in Canada. Let me just give you the price points right now. And then PHNMF in the United States. I'll wrap it up after this. 48.5 cents Canadian, 36 cents US, trading virtually nothing. The supply at these levels has completely dried up. 2 weeks ago, we had 17-cent paper from a placement become free trading. It was a small raise, and I was involved with regard to, sharing the allocations with people close and long-term investors that would be good long-term holders in the deal. I took a big slice of that, and we are just not interested in selling any of our stock anywhere near here. So that first run that we had up to almost 60, it cooled back off. It came all the way back down to the low 40s in the last little while. And that was basically, I don't want it right now. Thank you. Um, just go, please. I'm on a recording. Sorry, Mom. But we've got, we had this run from March 1st of 20 cents to 55 cents, uh, a very like manageable pullback to support back down into touched into the 43-cent Canadian area. Another little pop back recently to 55. Now it's at 48. It's right on that 50-day moving average. Uh, we raised a million two or so, million 1.2 at 45 cents to drill. We've got incredible prospective gold exploration projects in Nevada. Incredible. So we're going to have a program going there within weeks. I don't know exactly how Paul is going to allocate to what, if we're going to go just for Dobbin, or if we're going to do some work at King Solomon too, if we're going to get something done at Crescent Valley, which I know is permitted. All very, very high reward versus risk, meaning, these are the Carlin trend type of deals that, let me get out of this noise here to wrap this up. We've had these vetted by David Matheson, who is, just a guy that he's been around the block a long time. He is a superstar gold exploration geologist in Nevada, one of the best ever, in my opinion. And he's vetted the 4 projects that we have, including underneath our vanadium asset, which is massive, largest, highest grade in North America, PEA stage. We have some developments, I think, coming up with financing finalizing for MK Plus, which had come to us for a future offtake agreement to get just up to 20% of the vanadium produced at Carlin if and when in the future we go into production. No discounts, no bells and whistles, just pure make sure you leave 20% for us, because they see a scramble over the next 5 years where there is not going to be enough vanadium to supply hyper growth scenarios like MK Plus, which is cracked a code with solid state batteries, and is going to be in utterly high demand. We've heard that they are close to finalizing a $75 million private round of funding that would value our stake. We own 5% of that company, and the parent company, at 4 to 5 times what we got involved in, which was at the time about an $82 million post-money valuation. So not bad. I mean, this is US dollars. We have, it's about a $4 million slug of equity in a very sexy vanadium technology company. And now that is going to be worth like 350, $400 million. And we have non-dilutive provisions in the contract. So the valuation can go up 5x. And until it goes over a $500 million, we don't get diluted one bit. So let's just say it goes up 4x. I mean, and this could be announced like next week. They're in the final stages. It sounds very real. It's an Indonesian billionaire that is looking to fund that company out of Tokyo. It's a very real scenario, very exciting. But all of a sudden, we could have a 20 million plus Canadian asset on our balance sheet. It's pretty juicy for a company that's barely got a $40 million market cap. Um, and growing. And the least that we're ever going to have is a 3%. We can only get diluted once it goes above a half a billion. So if it becomes a unicorn, we never will own less than 3% of that asset. So that's going to be interesting. Then we're out for all these grants. We've got, if you look into the Friday 3-4 weeks ago press release about the third patent for separating and processing petroleum coke to make high grade vanadium and nickel concentrate that is proprietary. And there have been a good amount of tests that have been done on this with particular materials, with particular potential partners. This is one of the things that I think that nobody really knows what's going on. It could blow the doors open. Um, this is all substantive. This isn't me promoting you guys. I mean, this is my biggest position. So obviously, price goes up, I benefit. So, you guys buy some stock, the price goes up a bit. But this isn't about GIL is the one group that we own the majority of the stock in the float in Phenom Resources. The goal is to make sure that all of my people have meaningful positions while we're still under 60 65 cents Canadian for now, certainly under 50 cents Canadian, but uh because once it starts to really go and some of these things become more evident, and God forbid we get a rally in the vanadium price, all of these things are so exciting. And vanadium is like trading at $5.50 a pound, less than that, all-time lows. This vanadium went to 30 some dollars a pound in 2018. So vanadium is going higher in time. It's just one of these commodities and precious, not a critical metal per se, but pretty much that we've got big problems in the West where we have vanadium here, but we don't produce any. And it's controlled by China and Russia that control north of 80% of the production and then the usage. They don't share this stuff very well. So strategically speaking, phenom vanadium, and there's some things I can't really get into. They're not done, so I could talk speculatively, but I'm going to not do that and ask you guys just to trust the fact that um, I have millions of dollars invested in this company. I never imagined in my life that I would ever, you know, put, and it's over 6.5 years since I first invested in Phenom. My position size went up and down because in the first 7 months after we funded around in November of 17, by July of 18, the stock was $2. So a lot of it was taken off. It came back to $1, very volatile, went back to $2 going into November with some things with the Chinese that really caused the price of vanadium to skyrocket. Things like that can happen at any time as well. Again, but I took a lot of profits at that time, still kept a big chunk of the position, rode it all the way back down. We had done the financing at 14 cents Canadian, goes to $2. We had warrants at 24 cents. And the stock went all the way back down to 15, 14. We come back in during COVID, June of 2020, now with a gold component that Dave Matheson is saying this has the perfect Carlin trend footprint of there being a monstrous elephant-sized gold system below and around the vanadium that's at surface. And we got re-upped at 16 cents Canadian, and it's gone as high as 80 or so this time around, but it's really been, and then back all the way down not long ago to 17 cents. We got a small financing done there, but the financings along the way have been very small. The only ones that we did that were bigger were the ones that like Rob McEwen led a $6 million raise at 50 cents. That was my biggest investment in my life. I put in a $500,000 at 50 cents. He did 1.5. We had Tukey Angus, God rest his soul, and some other prolific investors that got in there. 40 cents right before that is when I first introduced this to Rob to get involved, and he put in 400 grand, and I matched him, even though I was at like, I put in like 100 and change, and 400 was quite a stretch for me at that time. This is going back a little over 3 years, and I was like, I gotta step up. So that's why, and with all the open market buying, I'm the largest shareholder in Phenom Resources. My estimate, and I'm going through different things right now, hopefully over the weekend to find out the exact, but we just let 1 million warrants roll off at 55 cents. Rob and I were the biggest potential beneficiaries, but now the biggest people that took a hit where 1 million warrants went away at 55 cents. It was right at the money at that time. Most shareholders will beg the companies to say, you better, extend these, give us another year to be able to exercise the warrant. My philosophy is no, let the warrants roll off so we continue to have a tight share structure with no overhang where people are trying to flip their stock at 68, 70, 72, 75, 80 cents to exercise their 55-cent warrant. We have none of that. Okay. This structure is clean. It's also very tightly in strong hands, tightly held broadly. We have believers, core believers. So in any event, the key level now is 55 cents Canadian. You'll see that when, not if, but when Phenom breaks 55, 56 Canadian, which is only 10% higher, the stock is going to explode into the 70s to mid 80s pretty fast. And that's where we're going to have that next level of resistance. So we might pause there, get a bit of a pullback or whatever. That would be your, I slept on this thing over and over and over again. If it ends up doing that and then it pulls back to 65 to 70 briefly, you better get on your shit and get a position, because some of the things that are very real and percolating in the background that I think are going to come to the foray in the second half of the year are, they're monstrous, monstrous. And so the million warrants that rolled off, I've acquired more stock in the open market when it dipped down into the low 40s recently. And I'm back up to, I had 10.6 million shares and warrants. The million warrants go away. And now I'm back up to like 9.8 million shares and warrants, with well over 2/3 of that being stock that I was bought and paid for. It's not just a bunch of warrants. And a lot of the warrants are way out of the money. And frankly, my cost average, to the best of my ability so far with looking at these things, not with an absolute microscope, is barely below 40 cents Canadian. So if I have a 38-cent cost average and you've got an opportunity today to buy it at 48 cents, what do you think? I'm in this for fucking 50% or something? I'm in this to make generational wealth. And we have an opportunity to do so. This story at Phenom Resources is becoming, in my opinion, I see so many different stories and opportunities. And I'll go to the Rule Conference and we'll see what they got. Maybe there's going to be something that stacks up very high and it's like, wow, this is a very sexy story. There's a lot of meat on the bone. Phenom is becoming the sexiest, or one of the top 3 to 5 juiciest, exciting, substantive companies and stocks in the entire junior resource market. That's where I'm shifting recently. I've come to these conclusions in the last few weeks, and that's now what I'm telling you guys that I feel is the case. From being this compelling deal with the defensive side of it, with the vanadium asset and blah, 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 all those things were true, but the conviction I have now is on a different planet, and sky is the limit. So I would always tell people, hey, buy on pullbacks, try to see if it drifts back down. I'm not looking to take sellers out for you guys that are buyers with me at higher prices, but I don't think there's any more supply around here. And this stock is getting ready to take a leg up. And I would say at a minimum, just be alert. Like if this story is of interest, you might have started a position, but I mean, this is the largest investment I've ever made in my life times multiple times. I mean, you're talking about almost 10 million shares in warrants. Uh, I mean, I do well in life, but I'm not that freaking rich. Like this is way out of whack. And it's also not because I'm blinded and I'm married to the story. I've made that mistake plenty of times, but it's because of the special nature of this and the fact that you can at least rest assured while I have breath in me, which isn't guaranteed, this company's not going to do anything stupid with financing. And they're also not going to run out of money ever because I'll put it in and I'll raise it, just like we've done in the last several years. Phenom is not a company that's going to have its back against the wall trying to scrape together a $400,000 private placement to survive. All the stuff, and even there have been some costly testing to go into this potential third leg, I'll call it, of the vanadium business, which is the most attractive from a profitability standpoint by far and the quickest to kick in, where things all change. Uh, Doing some of those testings, it basically took Phenom's burn rate from 40,000 Canadian a month to like 50, 55. That's what we're dealing with here. Paul Cowley runs the treasury too conservatively, in my opinion. I'm like, you have to hire some people. We're going to be a $50-100 million market cap company in the next weeks and growing from there. You have to have, they did hire another geologist, but I'm like, get ready for infrastructure. Get ready for, we're bringing in the bankers to spin out two different companies. Get ready to have a higher burn rate because we're going to need it. We have so much shit going on that we can just rip the cover off the ball with value, but you don't run these little exploration companies where you have like the one guy behind it and like, a board of directors and one other person. And then, you run it at nothing and you wait for some sort of a miracle to happen. A lot of those guys don't know how to scale businesses. We have a group around Phenom that is nurturing this thing along the way. And I will tell you this as a last thing. Next week, when I'm in Boca Raton talking to some of the biggest investors and resources, what do you think is naturally going to come up? If I share with anybody that is sophisticated and rich in this arena, there's no way they're leaving that conversation without at least going to buy some stock for their personal account. Trust me on that. So I'm not like going around promoting this. I'm going for many different reasons, but my enthusiasm is so natural, and the facts here and the groundswell happening underneath us. Uh, the savviest, smartest, wealthiest investors in resource investing, and a chunk of them will be there in Boca Raton next week. They're going to be in the market. So I think next week we're going to break 55 and this thing's going higher. Cheers, guys.